Hey guys, Desert Magic here, and everybody, and I mean everybody, people not even involved in Bitcoins and other cryptocurrencies are asking the same question, especially, well, this week specifically. Will the price of Bitcoins go up or will the price of Bitcoins go down? And when I say Bitcoins, I pretty much mean every cryptocurrency because they're pretty well tied together. It would seem that when Bitcoins go down, Ethereum goes down, Litecoins go down, and the ratios change because some people find actual usability or, other people mining different currencies and stuff. So there's some switching between them, which is why like the ratio between Litecoin and Bitcoin has been so wonky lately. But typically, the short to midterm major swings and overall like multi-day trends tend to be really like network-wide, I guess you would say. It affects virtually all the coins. I mean, even down to coins that cost like a fraction of a penny, they go up and down with the price of Bitcoin too. Although seriously, have you guys looked up the price of Coin? It just hit 3 cents. I hold a lot of them, but like for real, it's not a bad time to look at that one. So when people say, will Bitcoin continue to go up or will it crash? The answer in both cases is maybe. And this is the type of helpful and informative information you'll get on my channel. Nobody knows, it's chaos, it's random, I don't know. Okay, no, that's not true. So let me just tell you why it would go up, why it would go down, and then you can, look at different factors, like especially news stories. That's huge. That's a big factor. But other factors too. So let's go back to, will it go down? And apparently the answer is yes, because it dropped from, just in like the last week, from 20,000 down to, technically it flirted with 10,000. That's a 50% loss. And now it's back up to like 15.6, 15.8. And by the time you're watching this, it's probably $500 different. So to everybody who's like, it's a crash, we're all gonna die. If you look at like, we'll say the end of October onward on a chart, is it really a crash or is it a correction? I mean, keep in mind, in October, we'll just say, I don't know, the end of October, I think it was, $5,600. And a little bit before that, it was like $4,000. So the beginning of November, right around that time, it was like the mid 5,000. So we'll just say, I don't know, 50, well, it hit about 6,000 pretty early. So we'll just say 6,000. So then you go and follow the trend. It's like, okay, going up. November was up. It's going 8,000, 9,000, 10,000. And then right around the start of December, there was 2 huge spikes that brought it up to the high 17s. And then at its highest point, it was, I think, 19,700, something like that on Coinbase, or I should say GDAX. So everybody thought, oh, look at that trend. I'm seeing a trend. It's going to continue to go up. Well, why? And like people's reasoning is because it's going up. It's going to keep going up because it went up. Yeah, how'd that do for the housing market? No offense, but that's not very strong logic there. I mean, people say, well, Bitcoins is based on nothing and the price is just completely volatile. I mean, if it goes up or down, there's no reason. That's not quite true, but to an extent, it's kind of true. I've said it before, I'll say it again. This has nothing to do with, oh, the cost of digging this mineral out of the ground, or the transportation cost of this, or fuel to get our inventory to our warehouse. Like, that's like real stuff right there. That's like real products and everything. I mean, you look at gold prices, they go down when somebody announces they're opening a new gold mine. It's very, very predictable cause and effect. With Bitcoins, if the price went down, it's because a bunch of people decided to sell their Bitcoins, and if the price went up, it's because a bunch of people decided to buy Bitcoins. That's it. That is all there is to it. That is the only factor. So now back in the day, to manipulate it, a bunch of criminal groups would, get together a ton of robot servers to buy some, attack time on the dark web or whatever, probably with Bitcoins. And they would just attack like MTGOX, TradeHill, BTCE, the big exchanges, or even like a miner one, or even somebody's pool that they were mining at. They'd attack like, I don't know, Slush Pool or whatever. And then everybody's like, oh my God, they got hacked, or it's an exit scam. If they got hacked and got funds stolen, that's bad, because every single time that would be enough funds to drive down the cost of Bitcoins from people quitting, people selling off, and just everything. It was just bad. It would cause the price to go down, and people knew that, so they would sell off as early as they possibly could, because they knew the price was going to go down. So kind of a self-fulfilling prophecy type of thing. But also, I mean, if somebody stole 50,000 Bitcoins and then just dumped them onto another exchange and hit sell, yeah, they're going to tank the price by themselves. So the new people would panic when they can't go to their favorite exchange website or pool or whatever. Everybody else who wasn't involved in that pool would sell off their stuff, and then the price of Bitcoin would get like cut in half. And then the criminal group would take like $1 million, buy a ton of Bitcoins, you know, while it's low, and then stop the attack, and then, oh, look, everything's fine. It was just another DDoS. Yay. And then the price would go back to normal, basically. And they would make, you know, a 100% return on their $1 million. So if the DDoS attack cost them 50 grand, then there you go. Profit. It was pretty Wild Westy back then. So it's kind of the same now. It's just pretty much everyone, and I hate to use that term because it could just be like even 10% of people, but just if a lot of people from a money and balance standpoint all think the same thing and all take the same action, the price is going to go one way or another. One of the biggest Bitcoin crashes I've seen lately this year was when China said they're going to ban all ICOs. Everybody knows ICOs were a scam. It's like Kickstarter, but with less accountability, if you could imagine such a thing. So ICOs are stupid, and nobody with a brain took them seriously, but people they read the thing, and they're like, I don't really know what an ICO is. I don't really follow Ethereum and whatever. But China's cracking down on Bitcoins, what? And then they all just like panic sold because just seriously, some Bitcoin investors are complete idiots. They don't understand what they need to understand. So a bunch of people kind of mistakenly said, oh crap, this doesn't bode well. And some people were like legitimately, oh man, ICOs were a good reason for this to go up. And then boom, the price just tanked. But as long as more people are interested in buying into Bitcoin instead of selling out of it for, we'll just say US dollars, then are created every 10 minutes when the block is solved, there you go. Mathematically, it has to go up. That's just how it works. Now, won't we get inflation and devaluation if, 12.5 Bitcoins are created every 10 minutes, which is how the system works if you're not familiar? Yeah, that's like constantly printing money. So it does rely on two things. One is, like I said, more people getting into it than out, which, I mean, has the whole world adopted Bitcoins yet? No. Have people just kind of sort of heard about it and they're kind of thinking about getting into it? Yeah. So to say there's a long-term upward trend is an understatement. And also, like, there's the whole reward splitting thing because that's designed to help inflation. We're like 900 days away from that, but look it up. Basically, it used to be 50, let's just put it that way. Then it was 25, and now it's 12.5 every 10 minutes. So what if everybody who's ever interested in Bitcoins is interested in it, or a bunch of people leave the whole system for one reason or another? Well, then the price will go down, and people say there's no floor. It's not based on anything. It's like, if you were to invest in Samsung, then you're going to be real, watching the news about what it costs to build LCD screens and, the minerals that go into them and the magnets that go into them, because you got to go get those out of the ground, and it's like a single supplier thing. And I mean, just look at the cost of flash memory right now. It's outrageous because there's a shortage. Ironically, because of Samsung, pretty much. Well, it's also Apple and Nintendo's fault, so let's not, forget them. So the price went up, which means the manufacturers are actually kind of making more money because they take advantage of it, and yeah, their stock's probably going up right about now. But that's like real commodity raw materials prices, and you can say, okay, that's the floor, because can their products fall below this price? No, because they cost more than that to produce. If Apple really had some problems with customers, like if their customers were really angry at them for some reason, so in other words, like right now in actual reality, they might have to lower the price of their next product by 200, but could they lower it by 700? No, because they can't. It costs more than that to produce. So that is a price floor. So you could extrapolate that and say, what would be their income in that case in case they had to do that? Okay, that's the lowest their stock could drop, which it's not quite that simple because the stock is not quite that tied to like actual business. If everybody wanted to sell off their stock, it could hit $1. I mean, it's just, what do people want to do? But hey, at a certain point, they just buy all their stock back and go private. So what is the floor for Bitcoins? Well, it's nothing, right? Bitcoin is based on nothing. It's just created out of thin air. That's how it works. It's not wrong. But people who really know how the entire network works from start to finish in all of history and every little detail, it's really not that complicated, which is why it's kind of predictable. Okay, specifically non-Bitcoin currencies, ones that can be mined with DAG technology, they are based on the cost of electricity and the cost of graphics cards, because the miners are the ones who control the flow of Bitcoins. So if they're not making money, they are going to shut off their graphics cards, sell their rigs on eBay, and just be out of it, basically. And if 50% of miners do that, the remaining 50% will make twice as much. That's how the difficulty level looks if you want to look more into it, but just take my word for it that that's how it works. So either miners are going to start turning their equipment off, which after a month or two, yeah, they might. I mean, because you can't mine at a loss, you have to pay your electric bill. So unless you got money in your pocket, which, I mean, if you've been mining for like 5 years, yeah, you probably do at this point. But it comes down to preference. Do you want to try to cover it for now and hold on to the currency that you're mining and then sell it later when it goes up? So either miners hold on to their currency and keep mining, or they, well, basically stop generating currency and stop mining. And like I said, the second one would drive up like the profitability of miners, so the price would be all right. But the much more likely scenario is miners just keep mining but stop, selling off their currency. Well, if you get the sell removed from the market, the price goes up. That's just how it works. So miners are just, they'll hold on to currency forever. The problem is, if it hits, let's say Bitcoin hit 2,000 and that's not high enough. Well, if it floats up to 24 and that is high enough, then everybody's going to sell because now they can pay their internet bill. Well, that too. Their electric bill. And then those sell orders will press it back down to 2,000. So the more people hoarding coins, getting ready to unload them on the market, it's a bit of a price suppression long term. But with all these complications, at the end of the day, miners are not going to keep mining and keep selling coins for a price that does not pay for the graphics cards, them failing, the depreciation on the graphics cards if they don't mine them until they fail, and all the other equipment, the cost of high-end power supplies and electricity itself. And the other thing is, mining hardware breaks all the time and people replace it. But do you think that new miners are going to enter the mining market and existing miners are going to continue expansion and continue replacing equipment when it breaks if it's not profitable? I will tell you that from my own experience, absolutely unequivocally, no, they will not. If the payoff period of your hardware with power considered, so like you buy a $200 graphics card, if it is going to take you, I'd say, more than 14 months to pay it off, nobody's going to touch that because that is ridiculous. The average for like the majority of Bitcoin's life, not counting recent events, is basically, I'd say 10 to 14 months, kind of goes back and forth. So if you buy a rig and you can pay it off in 10 months, people seem to find that to be acceptable. And that's in like Wisconsin at residential, power, non-industrial, not China, not buying graphics cards straight from the manufacturer, which I think they kind of don't really do that. So all these little tricks like, cheaper components and, whatever, cheaper electricity, other people might have an advantage. So it might really be 6 months. It's just, for me, from my perspective, it's 10 to 14. But anything past 14, they can't even sell ASIC miners for actual Bitcoin mining because that's the type of device you need to mine Bitcoins. So let's look at that right now, because everybody knows with a huge spike in Bitcoins, I mean, they went from 2,000 to 20,000. It's like 10x in like less than a year. Not bad. Well, if everything was chugging away and miners were happy at 2,000, that doesn't bode well for what it is right now because we're so high above the floor, that's a long way to drop, and then you'll hit the floor and it'll hurt. That's a great metaphor. I didn't even mean to make that one. So right now, okay, we'll just say it's a good batch Antminer. 13.5 terahashes per second, 1,323 watts, power cost of 13 cents per kilowatt hour, which is a little bit higher than what I really get, but why not? Just an average pool and exchange fee of 1% added to it, because I'm sure somebody's going to charge 1% at some point. Then obviously current difficulty, current Bitcoin price is 17.6. And hardware cost of $2,975 with power supply and shipping. Actually, I'll just put in 3,000. Close enough. All right, you might want to buy some fans or something. I don't know. Power cables, extension cables, power strips. There you go. Now you're at $3,000. So I hit calculate on the little calculator here, and it says it'll take right now at current prices, which is 17.6, and I don't know where they're pulling that from because Coinbase says 15.8, but whatever. Days to break even, 108.9 days. So, just short of 4 months. That is a really short amount of time. That is not 10 to 14 months. That is significantly less, which means that a bunch of people want to enter the mining field right now, and the mining, because there's more people doing it, the profitability gets split more ways between more people, and all the miners make less money because the difficulty goes up. Power doesn't go up, graphics card costs doesn't go up or down, nothing. It's just, that's the factor. So if this price continues, you're just going to see double or triple the amount of miners, or people making their mine, 10%, 20% bigger, doubling it, whatever. One of my friends quite a while ago put a lot of money in with a couple other investors and built like a 50 to 100 GPU mega rig. They found a place to put it with an internet connection, with outside ventilation. Did it real proper, real dirt cheap, and he's probably richer than holy crap right now. But right now, because of all the money he's sitting on, he probably is considering just doubling it, because look at the outlook. I mean, a 4-month payoff, and then after that is pure profit. So for every 1,000 you dump into it per year, I mean, we'll just say 120 days, you'll triple. Or like 2x your money back, 3,000 gross per year, 2,000 profit per year on a $1,000 investment. Oh, and also you can still sell the parts for about 25% less per year than what you paid for them at the time. So we're a little bit above the floor. So how bad would it have to be? Well, let's just play guess and check here. Let's say Bitcoin's hit $8,000. That would be a 293-day payoff. So right between 10 and 14 months, basically. Actually, no, that's about, if I could do math, that is approximately 10 months on the dot. So if Bitcoin's hit 6,000 and the price of ASICs were not changed to match that, which keep in mind they probably would, that'd be 451 days. That's pretty bad. So now Bitcoins are Bitcoins, but anybody mining right now is almost definitely not using these hyper expensive ASIC machines, which, I mean, if you wanted one right now on eBay, they cost about $5,000 because they're in hand and working, and they're sold out at Bitmain Tech. And the next group or whatever isn't due out until, I mean, if they ship the current one that's sold out, that's like February, so probably like March or April, I'd say. And they're probably going to cost more, but if the price crashes, then they'll cost less. I mean, it's really based on a payoff period. That's what they sell it for, not how much does this actually cost to build. And hey, price it at what you can get for it. If you can get more for a product, raise the price. I mean, I don't have a problem with that. It makes sense. I mean, they'd be like, oh, Bitcoin doubled in price. Too bad we don't see any of that. No, raise the price of your Bitcoin miner. All right, so let's look into direct Ethereum mining, because Ethereum is like the third largest after Litecoin, arguably, depending upon how you measure it. Right now, from what I can remember, it depends on overclocking and stuff. I'm using kind of a generic number based on average RX 580s. If you were to roll out some RX 580s right now and overclock them moderately, they'd run at about 180 watts. I think they get around 23.3 megahash per second, depending upon a whole bunch of factors. And then, I put in the same numbers for everything, and the cost of 250 per card, which is the lowest you'll ever see, trust me. Okay, like 2 months ago, I got some for 232, but still. So the break-even point right now is, oh, what a coincidence, 107 days. That's almost exactly what an ASIC is right now. It's almost like, that's how that works. They're all kind of meta-currencies of each other. But, even if you say, okay, I'm going to drop, $150 on a power supply, and it's going to run 4 cards, so you divide 150 by 4, add that to the cost of the cards, and you still need a motherboard, a chip, and some RAM, and a hard drive. So you add that all in, and we'll just say it's like 325. Even that's on the high end. I mean, just don't spend that much. That's still 140 days. I mean, that's nothing. That's not even 5 months. So of course people are going to keep doing it, and so the price floor on that would be very interesting. Ethereum would have to roughly cut in, well, more than half. It would have to drop by about 60 to 70%, somewhere in that neighborhood. So my point in all the whole mining thing is let's do like a little mathematics, elementary school word problem here. Let's apply it to a real life scenario. Ethereum, if you were to buy it right now for $7.59, then it could drop to approximately like something in the neighborhood of $300, maybe a little bit lower. And it just can't go lower than that, not for long term. I mean, it could dip to 150 because of circumstances, because people buying and selling on the exchange. That's a faster reaction. It's direct to the price. But the miners over long term dictate the price. They dictate the floor because it's the graphics card and the power. The majority of them will simply stop selling, and then the price will recover. It just, that's the floor. Now you're probably thinking, oh my God, I was going to buy Ethereum, but you're saying the floor is a loss of, 50, 60, 70% of my initial investment. Yes. So let's go back to Bitcoins and ASICs, because Bitcoin prices are what everybody cares about. But like I said, they're all kind of the same. They're all pretty well tied to each other. Will Bitcoin stay at, let's see, what are they at right now? It's probably different than when I had started this video. 15.8. I don't remember what I said before, but they're at $15,844 right this second. So I already stated the Bitcoin floor is between $6,000 and $8,000. It just cannot go lower than that without rebounding eventually, because the entire mining network would be losing money, and they're not just going to say, I'm going to keep maintaining the network out of the goodness of my heart. No, nobody's going to. That's not how that works. So that is a long way to fall, but it just really can't fall lower than that. People are saying, what if Bitcoin returns to $5? I remember it used to be $5. Yeah, it used to be 50 cents too. I remember that. So what? That's not realistic. You'd switch on your ASIC miner, and for every dollar you make, you'd spend $99 on electricity making that dollar. It wouldn't work. So there is a floor, and that's kind of nice, because with certain other investments, there is no floor. You could lose the entire investment. So never, invest with more than you can afford to lose, but keeping that in mind, there's only so far this could fall. Now, could it fall back down to its original prices of $2,000? I'm going to say no. I'm not even sure how they were surviving at that, other than I assume ASICs were, $1,000 or less back then instead of $3,000. That's usually just how it works, but at a certain point, it's like, what does it cost to build the ASIC? They're not going to sell it for below that. So that's like the true bare bottom floor. So to answer the first part, will Bitcoin go down? Will it crash? What is my risk? That is what it is. So hopefully you get it. Now, the one thing that I have to say is, could it crash? So like that's like mathematically, what would it have to be? How low could it go theoretically? In practice, with today's scenario, would it? Well, the reason that Bitcoins went from 4,000 to 20,000, that whole stretch pretty much, was investors. Now, we're talking like not just amateur investors, we're talking like independent day traders that are like, I own some gold, some silver, some stocks, some bonds, some securities, some real estate. They own everything. They got a diverse portfolio, as they always say. And then they're like, I should get into Bitcoins too. That, it's looking promising. It's a real thing. It's established. They look into it and they're like, oh, this is not a scam or a Ponzi scheme. Oh my God, do I want to punch every last person who says that? It's not. That just stems from a complete and utter fundamental lack of understanding about how Bitcoins work. So anyway, okay, those are different people. Those are not miners. Those are not people running mining rigs, because if that many people, instead of buying into just directly the currency and owning it, if they said, let's mine some Bitcoins, that's a whole different thing, because like I said, there's only 12.5 Bitcoins made every 10 minutes and all the miners share them. Yeah, that doesn't work so well if that many people all decided to start mining. So thank God they decided to just take US dollars and dump it into the Bitcoin market, basically. So now those are the people where if they undid what they did, it would drop back down to 4,000, which is the price before they did what they did. So who cares what the miners do? They aren't in control right now. It is so far above the floor that the miners are irrelevant. They're just hauling in tons of money compared to what they were before. I know I am. And it is what it is. It's just they don't control it because they don't hold the most of it. They control the floor, not the price. Keep that in mind. So these big investors, if they bought in at like 10,000, 8,000, 9,000, 13,000, in fact, 13 was a really big place where a lot of Wall Street people were like, we're going to start selling securities and futures. And these people are like, yeah, we got $10 million laying around. Let's sell Apple stock, because God knows that's not going anywhere, and buy Bitcoins with it. And then they just like dump that money onto the market, and boom, Bitcoin goes up like $500 or something. There are Wall Street firms taking fractions of $1 billion and dropping them into the investment, because they even know that as they buy it, they're pushing up the price. So they're like fulfilling their own goal by buying it. They know they have that much push. I mean, everybody looks at the market volume, the trade volume, everything, and they're like, mathematically, what would happen? Okay, this, cool. So if those are the people responsible, do you really think that if they bought in at 13, they're going to go, yeah, we should probably sell at 10. That sounds like a good thing to do. It fell to 10, and the last time it fell to 10, it returned to 16 within half a day. But no, we're going to sell it. We love 30% losses. That's fun. Hell no, they're not going to do that unless they think incorrectly that, and then link them to this video, that it's going to fall to like 2,000. They're like, well, we lost the money. Might as well just jump ship then. Okay, then we're back at $4,000 Bitcoins until the miners reinforce the floor, because like I said, 6 to 8 grand, that's the lowest it could go. So, I mean, keep in mind, these people are new to Bitcoins. I'm sure they didn't jump in with, $500 million unless they really researched it, learned how it worked, and know what they're doing, and know the history of it, and know why it fluctuates. Because if they're just like, ooh, number on screen scary, sell button, yeah, somebody that stupid would affect the price pretty drastically with their own stupidity. But I think that, this isn't like a day trading kind of thing, although a lot of people are clearly doing that. They're like, oh, let's make a 3% swing this way and a 1% swing. Cool. Because, I mean, instead of just let's hold Bitcoins for 3 years and see what happens, which is like, that's like a bond. you already got the funds on an exchange or in a wallet file. You might as well just hop on and be like, yeah, sell high, buy low. Had to think about that one for a second. Didn't want to get that one backwards. That would be real embarrassing. And yeah, I mean, you don't need Bitcoins to go up 15% if you can make 15% by, putting in clever buy and sell triggers. Set up a little cone where it's like you hold half Bitcoins, half US dollars. And if it goes up, you sell some. And if it goes down, you buy some, and you've got funds to do both. That's very typical. It's just they collapse if you have a trend that doesn't zigzag. So besides people trying to do that in the meantime, and even if they did do that, then they're more likely to be like, oh, look, it tanked, by $4,000. I'm just going to sit this one out for a second to see if it recovers, because the golden rule of exchanges, I don't care if it's stocks, bonds, anything, doesn't matter. It's only a loss when you sell it. Tattoo that on your arm so that you don't forget it. If you bought Bitcoins at 15,000 and it dropped to 13,000, then you're like, oh no, I lost money. Not until you hit the sell button, bro, because it could return to 16 within, let's be honest, a day. So is there going to be a downward nosedive? Not unless everybody is stupid and sells it all off, because one little dip down that doesn't recover for a certain amount of time will make these day trader types nervous. They'll sell off everything, just panic sell, and then that will cause the price to fall more. And then more of the midterm to long-term people will be like, oh crap, this might be a trend. And then they sell, and it's a panic buy-off trigger. It's happened many, 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 many times. You know what I do when people are acting that foolish is buy more Bitcoins, because thanks. Or you're going to panic sell it down to 11? Cool, I'll pick more up, which is what I did. Oh, look, $15,843 at this very moment. I rebought it about 12. That's because I know where the floor is, and the floor is, only down another 4,000. Then I could lose that percentage. I mean, I'm making a lot of money mining. That in a nightmare scenario, that's not too bad of a loss. I wouldn't consider, 30-40% to be a drastic loss. And look at that. I made another, what would that even be? 30%, 20% just overnight? Panic sellers lose money, okay? They're the ones always complaining about losing money on Bitcoins because they're stupid. So unless that happens, Bitcoins are not going to nosedive. Everybody would have to be in agreement, oh my God, this is a trend and there's a reason for it. Otherwise, other people who are really wise will just buy right back in, and then it'll rebound, and then all the people, oh, I sold at 12,000 and it rebounded immediately. Yeah, that's because it was at 12,000, idiot. It's only a loss when you sell it. Don't sell it. Also, I believe the other golden rule is buy low, sell high. That's how that works. Oh, so will Bitcoin fall? Mathematically, that's how low it could fall, and that's how much you could lose. And if it goes even lower than that, just wait for the floor to reestablish itself based on hardware prices and electricity. And will it realistically fall? No, I think the price is pretty much stuck where it is, just because of the amount of people who bought in and what those people individually would have to do to tank the price. Now let's answer, will it go up? Do you guys realize how much money had to be dumped into the Bitcoin network to get it to where it is now, to elevate it from like 3,000-4,000 up to like 20 at one point? It's a lot. It starts with the B and ends with illions. That's right. Gold and silver bullion. Okay, I had to. No, I meant billions. Billions of dollars. I'm not 100% confident that that's how you pronounce that. For Bitcoins to hit 50 or 100,000, somebody with like, I don't even know. I could do the math, which is why I hesitate to actually state a number, because it might be wildly off, but we'll just say somebody with like $5 billion, somewhere probably in that neighborhood, would have to like buy Bitcoins. Well, why didn't they already? And why did they think that it was a good investment now that it's already high? You don't buy high and cross your fingers that it goes higher when everybody who's interested in it already appears to have bought in. The price has been pretty stale for a couple weeks now. I mean, did you just take the sheer number of dollars and people that bought into Bitcoin to get it to where it is now and say, oh no, there's that many more people waiting for some reason and they're going to make it go higher? No, they're not. So is Bitcoin going to spike? Because remember, if you bought it at, $600, which was the price like forever, for a long, long time, and now it's 20,000, cool, or well, it was. Yeah, that's a pretty good percentage margin to make there. But is it going to happen again? With that multiplier, no. Are Bitcoins going to 10x? No. $150,000? No. Just no. It's not going to happen. It can't happen. No. So then you're probably thinking, why the hell would I invest in Bitcoin if it's not like amazing? Well, because you can make 10%. 10% is pretty good. Have you looked at your certified deposit rates at your bank? They're like 2% on a good day. Oh, you bought an ounce of silver last year? Great. You probably lost money. Have you seen silver prices lately? I mean, even just like currency valuation differentials, which I think you're not really supposed to invest in. If you make 3% on that per year, that's good. That's per year. Okay, I just made like 30% in like half a day. So, I mean, you can ride the volatility, or long term, there is a bit of an upward trend. So, you know, like I said, don't invest more than you can afford to lose. But that said, it's very easy to have an acceptable low target of return. Like, I have $10,000 and I want to make 1,000. That's it. What kind of government bond or like corporate, what do they call those? I think corporate bonds. What stock would you buy in what company that's like 10% in a year? And then remember, with Bitcoins, with all the fluctuations and the popularity and the rise and everything lately, you could just say the second I cumulatively hit 10% profit, I'm out. You could do it pretty damn quick. And remember, if you're comparing this to holding a bond or some kind of certified deposit or some equivalent, like a government one or something, you know, T-bill or whatever, I don't know, I'm not that into that investing. If you were to buy into those, like, look at the term on them. Like, how long are you going to wait to make that money? Even though it's virtually guaranteed, how long are you going to wait? So if you bought into Bitcoins right now at 15.8 and they fell to 14, just wait and 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 put in a sell trigger at whatever that would be, 16.5, I think would be 10%. If any time in the next year it hits 16.5, it will sell your funds and ta-da, you've got your 10%. So while I would say don't think, oh my God, look what Bitcoin did in the last, well, even 5 years. Oh, it went from $5 to 20,000. That's a pretty good return. Don't expect that to happen again. It is mathematically impossible. It just can't happen. So you're not going to get a 5x, 10x return. You're probably not even going to double up. But compared to other investment vehicles, it's a really good investment right now. Generally, in the world, geographically, monetarily, and a bunch of other factors, there are more reasons for the price to go up than down. Let's just put it that way. So besides block splitting and mind sharing and everything, it's like, it's more likely to go up than down, and it's not guaranteed like a certified deposit is. But then again, if your bank goes under, hey, nothing's guaranteed, although it's probably FDIC insured. So it's just a good investment. That's why I'm plugging it. It's a good investment. Now, buying currency versus setting up a miner, obviously, giving them your bank information and then putting in a number and hitting buy is a little bit easier than configuring an entire custom computer that you're kind of tricking into doing something it doesn't want to do with some sketchy, janky drivers and some weird software. And then monitoring it for the entire next year, making sure it doesn't shut down. Then you're risking the failures, and then you got to do warranty claims, and then it's, you know, then there's driver versions and optimizations, and then there's currency switching, and then there's nice hash getting hacked. I don't know if I would say that mining is easier, mostly because it's not, but mining is more profitable. It just is. I think that was the topic of my entire last video. So if you're interested, check that out. So if you were to just say, I want the highest return, you know, yeah, go build a miner, basically. Just build a 4-card mining rig. Real simple. Okay, once again, it is not real simple. But if you're just saying, I want a pretty good investment opportunity, boom, cryptocurrencies. You just pick one, like Bitcoin, Bitcoin Cash, Ethereum, and Litecoin. And I think that with the congestion on the Bitcoin network, Bitcoins would be the last one I would buy. So I should probably mention this at the end, even though I said it in a couple of videos ago. Bitcoin Cash has an upward trend, and so does Litecoin. Because they're less congested and they can fit more transactions. That's it. If somebody says, I want to send you some Bitcoins right now, the transaction fee is so outrageous that they basically can't. I would say get on your exchange account, sell it for Litecoins, and sell me the Litecoins, or send me the Litecoins. Because I don't even know what the fee is to send Litecoins these days, but it's probably not $20, which is the numbers I've been hearing thrown around on the Bitcoin world. And if you were to send me like some outrageous, like send me some Sia coins, it costs 1 Sia coin, which is worth 3 cents right now. And I think that's like a rounded fee. Like that's like what my mining pool charges me. It might be a fraction of one. They probably just have like an administrative minimum or like a mathematical whatever. You get it. So if people are forced, like literally forced, to sell off their Bitcoins because they can't just freely send them to people and use something else, the Bitcoins are going to go down and that something else is going to go up. And I think Bitcoin Cash, which was literally designed to fix the congestion problem, hello, and Litecoins, which are just designed better than Bitcoins and were the second currency ever. And I'd say Ethereum, but that's more going up and down because of like very particular uses, and it has like outside well, uses. So that wouldn't be my first choice because the volatility with that is nuts. But yeah, I would invest in those two. So if you want to invest in any of those, go to Coinbase or GDAX. That is the place where everybody goes. They have the best servers, most uptime, best customer support. They have the best reputation, one of the longest running exchanges. It just, ask a random person on the street. Actually, that'd be funny. I should do that for videos. Hey, where do you do your Bitcoin stuff? And they'll be like, Coinbase. And I just kidding. They'll be like, who the hell are you and what are you talking about? What are Bitcoins? Oh, is that thing from the news? Is that what they're talking about on CNN? I think I heard about those. But like, ask anybody who's been in the community as long as I have who do you go to for an exchange? Oh, some Sketchville one out in Turkey or Coinbase. And GDAX, which is, well, exactly what it sounds like, gdax.com. They're the exchange website for Coinbase, and I do believe that they're owned by Coinbase. So Coinbase is more like a wallet, and you can directly purchase and accept payments in Bitcoin and cryptocurrency and all that. So they're basically like PayPal, and then GDAX is more like, I don't know, E-Trade or something. So if you want to sign up to the world's most respectable one, here's a fun little deal for you. Want to start off with a 10% advantage over everybody else? Or just want to give me money because it's a referral affiliate link, full disclosure. If you were to purchase $100 or more of any cryptocurrency at coinbase.com with the link down in the description, don't just go there and do it. You are leaving money on the table at that point. You will get $10. So if you bought in exactly $100, you start with $110. A 10% margin to like completely screw things up and sell at the wrong time or whatever, which, I mean, honestly, it's just buying or selling. It's addition and subtraction. It's hard to like make a legit mistake, but we'll just say an investing mistake because in the last 3 minutes, Bitcoin just fell to 15.6. So if you're like, oh crap, and then you don't really feel like holding them for 2 weeks until it recovers, just kidding, 5 minutes. That extra 10% is nice. I mean, it's kind of like, free credit at the casino, which if you guys have been watching my videos long enough, I take full advantage of that mathematically, and I've been, well, we'll just say making a lot of money at the local casino. They should not give me multiple promos on the same day. I'm surprised their computer hasn't figured out what I'm doing. I feel like I'm an anomaly and they just don't care though. So yeah, that's like the deal of the century right there, because I know most people wouldn't have, $5,000 to dump in, because if you're going to buy in 5,000, extra 10, whatever, I mean, hey, it's free money, so not whatever, but it's a little bit less tempting than, hey, let's buy in exactly $100, because who doesn't have $100 to spare? I mean, even I do, and I'm broke as crap. But I got $100 laying around, come on. So, I mean, yeah, you can play around with it, and honestly, by the end of the week, you'll probably have 130, but I'll tell you one thing, immediately you'll have 110. So that is one hell of an affiliate program, I gotta say. I mean, I haven't really seen anything quite like that anywhere else. Gee, I might be a little biased because I'm making a chunk of change off it, but honestly, with how much I make in mining, trust me, $10 ain't exactly on my radar. But compared to how much I make on YouTube ads, it is, so... Yeah, which actually, I just thought of this. The amount I made on YouTube last month and the amount I made on mining last month are almost identical. That's actually kind of funny. I should like drag race them, which I would just cheat and buy more cards. So yeah, check out that link if you're interested, you want to get into it. And if you don't want to get your account hacked or stolen, use Coinbase. That literally should be their tagline. Like, they use like cold wallets and stuff. Like, they actually know what they're doing. So anyway, check that out if you're interested. If you have any questions, leave them down in the comment section. I will try to answer them, and I will see you guys next video.